Hi, I'm Pat Ball, and I'm joined by James Gauthier. He's the Chief Investment Officer at Justwealth Financial. James, happy 2021.
Same to you, Pat.
James, I wanted to start with an overview of how your portfolios, all of them, performed in 2020.
Well, I mean, overall, it was actually a pretty average year. Every year at the beginning of each year, everybody comes out with their forecasts, and everybody says it's going to be between 6 and 10%, but it rarely is. Last year, most of our portfolios actually finished kind of between 6 and 10%, the vast majority of them. So you would think, it was actually a pretty average year. But of course, if you lived through the markets in 2020, it was anything but average.
Yeah, no question about that. But a year ago at this time, there was no way anybody could have forecast what happened in COVID and what the spring looked like and the roller coaster ride overall. How did you manage that?
Well, I mean, yeah, things kind of bottomed out around March, and that's when we had a spike in questions coming in, concerned clients wanting to know what they should do with their assets. And we were pretty consistent in the advice that we provided. It's never a good idea to panic sell. Short-term events are going to happen in the markets. They are unpredictable, so there's no point worrying about it once they happen. There are going to be ups and downs. It's not a straight line over time. So if you stick to the investment profile that you've adhered to, that you've determined with your portfolio manager, and you are disciplined about it, eventually the short-term blips are going to go away, and you should resume a normal path to your standard returns over time.
I read through some of your advice at the time, and indeed, you stepped forward and said maybe if you got some extra cash kicking around, it's a good time to move into the marketplace. And that certainly seemed to have worked out, didn't it?
Yeah, in fact, I would say there were probably just as many clients that we had that were looking to get more aggressive at the bottom of the market as there were that were panic investors looking for reassurance that it was okay to stay invested. So we kind of had to balance both ends of that. We don't want people to go too aggressive. We don't want you to change unless something in your life has changed. So it worked out very well for those people who were able to add a little bit more at the bottom of the market. That's just the way how the math works on something like that.
Still, there was quite a breadth, a range, if you will, of returns from value investing to growth and old school to tech, those kinds of things. Talk to me about how you balance that all out.
Well, you're right. It was probably one of the most polarized years in memory. The difference between big tech at the one extreme and traditional value at the bottom end was enormous in 2020. And we don't feel it so much because we invest in broadly diversified securities, but some portfolios that we have tend to emphasize dividend-oriented stocks, which did not do well in 2020. So as long as you can explain and understand why things are happening, short-term events in the market, like a particular sector being bid out of control, it's going to happen from time to time. So again, recognizing that things kind of revert to their long-term averages, eventually things are going to work out.
Okay, talk to me about fixed income too. What was that year like?
Well, a general rule of thumb for fixed income is when interest rates come down, bond prices go up. So as we know, interest rates went to zero as soon as the peak of the COVID crisis hit. And when that happened, the bond prices went ballistic, particularly the government ones, which are a little bit more safe, but eventually the corporate bonds, higher risk bonds recaptured their momentum later in the year. And overall, it was a very good year for bonds. The Canadian market was up close to 9%, which, given the yields of now 1.5, is an extreme return. So, great year in 2020. It does kind of dim the prospects going forward.
Okay, so how do you prepare for 2021, especially in light of last time you and I were talking, it was after the American election. Now we've got the handover of the new administration. So we've got that at play in the marketplace.
Yeah, well, Donald didn't go down lightly.
No.
So, and there's also the stimulus and still dealing with COVID. There's lots of uncertainty that's still out there. We've done a lot of things that were corrective in terms of supporting the economy when it needed it, allowing companies some breathing space to be able to survive, getting stimulus checks in people's pockets, creating the vaccines to cure the COVID infections. So a lot of things were done correctly, but it's going to take a little bit of time, I think, before we're out of this volatility that's going to persist in the markets for a while. So being patient, like people were in 2020, ended up being the right strategy. We're suggesting more of the same for 2021.
James, thanks so much for your time today. Good luck in
My pleasure.
2021.
Thank you, Pat.